3 p.m. Eastern Time on April 16th. Title today, S&P 13.5% range. Let's discuss basically last week's disruption. Bottoms on Monday, Tuesday, top on Wednesday, failing at the highs. Basically, we have a 13.5% candle, all created in the S&P. I want to say it's about a 16% candle in the Nasdaq. So this week, as we come to the close tomorrow, Good Friday, there's no trading on Friday, bank holiday. So let's take a look at the technical picture, and I think we're going to have an inside candle or two as the markets are still trying to figure out what's going on. So that's where we're at for right now. On the technical front, little red on the day, still grabbed some nice profits. I still closed out some profits for the those wins include Microsoft, Coinbase, IBIT, Apple, Netflix, Palantir, and I also have some earnings plays. I did one on DHI that will run to Thursday, and right now it's heading lower. So I suppose it would have been better if I just took the trade today instead of yesterday, since the market is dumping a little bit. But we have earnings on DHI. Let's see what happens tomorrow morning. Hopefully earnings is going to push us back up into positive territory just a little bit. If not, it's a risk of about $300 to make $600. So we'll see. But hopefully price can bounce a little bit for Thursday, see if things can come back a little bit. NVIDIA news today looks like about $5.5 billion in write-offs in NVIDIA and potentially stalling about $18 billion in sales with a hold in what they can and can't do into China. And that was a big kind of slap on the wrist for NVIDIA. And the stock was down today. It's $2.5 trillion. And being top 3 market cap, it's going to drag the markets down with it. So we already started out a rough patch. Like we started lower for the day, sideways through the afternoon until about 1 p.m. And then right around the time, this is around 1:30 p.m., right when Jerome Powell's press conference kicked in, the market started to dump a little bit lower. So all in all in the day, 537 to 522. That's a 15-point swing on the SPY, and that's a big move for an intraday, especially since volatility has been coming down a little bit. I was looking at a butterfly spread earlier on SPX, and I'm glad I didn't really hang on to it because that was a butterfly spread to pin price around 5,300. Initially, I looked at the trade for about $1.10 or so. About $1.10 that was offering up about $1.75 to $2. Once price was going through there in that first little bit of Jerome Powell's press conference today. Wasn't a press conference, actually. It was just he was a guest at the, I think it was University of Chicago Economic Summit. So just deliver some comments. I had some screenshots that I posted in my Telegram. So, right, I just go Telegram, actually be easier. So here, PC prices likely rose 2.3% 12 months through March. Core PC estimated 2.6. Labor market is solid, broadly in balance, not contributing to inflation. We may find ourselves in a scenario with mandates in tension, sharp decline of business and household sentiment, as well as elevated uncertainty and reflecting trade policy concerns. We can't have a strong labor market without price stability. Administration's policies are still evolving, and the effects remain highly uncertain. U.S. short-term interest rates were little changed after the release of the Fed Powell's prepared remarks. We're well positioned to wait for more clarity for the time being. That's one way. Here's the other one. Oops, this top one. Where is it? This guy? Yeah, here's the other one. Did I not just... Well positioned to wait for more clarity. Here it is. We could be in a situation where we need to make a difficult decision. It will be difficult judgment if the Fed mandates do come into conflict. Goals aren't really in tension now. Labor is still strong. Fed's 2 goals are not in tension, but the impulse is for higher unemployment and higher inflation. So anyway, not really saying anything the market doesn't know that hasn't been digested already. But certainly the market is falling. We're 3% down in the S&P, Nasdaq down 4%. Dow is down 2.2%, Russell down 2.2% as well. Volatility going back up. Here's your VIX on the day. So we're down to the lows of around 28.62. We're back up to 34.35. VIX above 30 is crazy town, especially going from 60 to 28 back up. I mean, I suppose if you're a VIX watcher, hopefully a lower high to lower low is in the cards, because if we turn right back around and this level all the way back up to 60, I don't know if I've ever seen that before, especially at these highs. You can look back at any time in history and maybe a retest of like the 30s, but very rarely have we had an outlier move that has a huge volatility crush that goes right back up to where it started. So the closest thing might be COVID, where we had a big spike up, big spike down, persistently higher levels, peaked here around 87. So let's just talk about when we peaked around 60. So we peaked around 60, volatility crush, got back up the highs, volatility crush, got back up the highs, volatility crush. I mean, these are days. If you go to weeks, how many weeks of volatility we had during COVID? About 4 weeks, really. So here's COVID. VIX started to elevate 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks in a row of elevated volatility. And then we finally put in the top. This was a reversion and continued to go lower as the market found its bottom. So it can be persistent. And here's where we are currently. That was, what did I do? What was that? 2008? That was 9 weeks during 2008. Oh yeah, that's 2008 great financial crisis. Here's COVID. COVID seemed to be a little bit less time-wise. Yeah, 4 weeks, 1, 2, 3, 4 weeks. Peaked at the 4th week, and then from 5, 6, 7, 8, 9, reverting. And here's current. Volatility event from August last year. 1 week up, big volatility crush. I mean, your guess is as good as mine. Are we going back up in volatility? Are we going to revisit highs again? We'll find out. Okay. So anyway, point is on SPX, these candles that were created last week, this is a weekly chart. This is a good indication of what to watch for. We still haven't gotten up to the highs from Wednesday last week. This high from Wednesday, I would keep a close eye on. This low from Tuesday, I would keep a close eye on, right? So I could see the market dancing around in here. This would be one giant inside candle. So it's an inside candle for this week. We're not breaking lows. We're not breaking highs. We could spend literally weeks in here, whether it is a big swing that the market's going to use, or it's just a bunch of inside where the market's not really able to go lower but not go higher. This is what I'm looking at from a technical side. So this low, this high, if there's a little wave structure in here, we go low to high. Draw this a little bit differently. I put this in my Telegram. So low to high, pullback, test, pullback. So we pull back to let's say 5,100. So pull back to 5,100, maybe down to the round number at 50, 50 or 50. I'll just put between 5,100 and 5,000. If this is any type of wave structure, does it play out this way? Where we have low, we have high, we have some inside candle trading, and then the market either, gives it up and rolls over or possibly resolves. I don't know yet. Let me take a look. I've got some call trades in. Let me double check something in one of my courses. So let me look at, I'm going to search for my waterfall income. So I have one on the Qs. That one's done. That one's done. On the SPY. Okay, I'm looking for a waterfall. So that trade, we're at 522. Son of a biscuit. I'm taking freaking losses here. Dadgummit. So do I take the loss? I mean, are we able to get back to 540 tomorrow? I don't think we are. So this is 20 wide, and I think it's trading for $10 right now. Son of a biscuit. Let me see if I can close this out for, I hate this trade, but can I close this for $14? It's a crappy loss. But unless the SP rips 18 points tomorrow to get me back to break even, it's around, I need to get this thing to 538 tomorrow. I don't think that's going to happen. 538 is way out of the money. That's going to be, that's a tall task tomorrow. So I can save myself anywhere between, if I can close this thing down for $14, see if I can close out for $14. I'll try 14 bucks. Let's see. I can save myself about $6 of risk if I can close it out here. Let me try to get like 14.25 to 14.50. 14.25 just closed out. Okay, so I'm going to close this down for a small loss. It is super annoying. I'm taking the hit, but it's better than taking this thing at a full loss of $20. So I'm saving myself about $5.75 of risk. Closed out there. So those trades are done. April 25th expiration's fine. April 25th expiration's fine. Naked put still looks okay for May. These are up around 35%. Waterfall. This one's okay for May. This one's okay for May. Okay for May. Okay for May. Okay for May. I'm looking for calls. There it is. So this one pulled in 50 cents. It's trading for 78 bucks right now. I do have two contracts in here. I'm up about 78% of the max profit. I'm going to go ahead and just take this one off the table. So this one I could be able to close down 11 cents. It's not bad. See if I can get out of here for a small debit. $0.13. Come on, be gentle on the fill, would you? All right, close out for 15 cents. So that trade is May 30th expiration. 604, 594, 581, 580, 53 cents. Closing this one down for a 15-cent exit. 15 cents. That gives me 38 cents per contract. Risk is 47. There we go. So I'm going to issue this one. This is closing out 4/16. Took about 13 calendar days. Let me update that one for the trade service. That is Waterfall. Trade number 77. SPY 604 by 594. And the 581. And then the actually I did this backwards. Hang on. I'm going to go 580 by 581 bull call spread. And the 594 by 694 bear call spread. Pulled in 53 cents credit. Closing 15 cents debit or less. Keeping 78% of max credit. Okay, so if I go 53 minus 15, 38 divided by 53, it's about a 71.6%. Okay, so that trade is going to be closing. I'm going to close all these down. So 80 bucks, close, closing at 13 cents. Okay, keep going. So closing, closing, closing. Good on that one. Okay. A few more accounts here. Good. Come on. Okay, still going. Come on, fill me at 15 cents. Closing down for the win there. Okay, almost there. Good. Let's go close. Aha. Okay. Closing. Good. So those are all done. So SPY closed out for profit. That was a SPY waterfall. 53 closed at 15. Any other ones? XSP is out to May 16th. Watching that one. Okay, I think that's it. All right. So I still have 1, 2, 3, 4, 5 trades or 3, 4 trades running for May 23rd. I'm sorry, May 23rd, May 30th, May 16th, May 16th on SPX, XSP, SPY. All right, good for that. As we are, man, this market just is like bye bye. Are we down 3+% now? 5,200. There's room to get down to like 5,100. Not today, but just saying like market is dumping a little bit today. We're down 3+% in S&P, 4+% Nasdaq. Russell's down 2, Dow's down 2.3, volatility up. Let's look at currencies for a moment. We got some comments here. Dollar's falling too. This is today. So Swiss getting some safe haven bid. Euro, Japanese yen creeping up a little bit. CAD, Aussie, New Zealand weaker. Pound and dollar both weak. Reasonable amount of volatility, 80 on the upside, 70 on the downside. So, dollar Swiss down about 150 points today. Dollar index making some fresh lows. Let's go back to the daily time frame. Again, oversold conditions. Let me take a look at one of my macro workspaces here. Let's go to dollar index. Gold has had itself another day. We do have some divergence on gold, but this is not top that I want to call. I spent a lot of time talking about gold this morning, and I I mean, I wouldn't be surprised if somehow we have about to be a freaking crash coming on gold. But this capitulation move, I measured it out this morning. If it's anywhere near the run we had from 2011 to 2000 or 2009 to 11, that 2 year run where we had like 600 plus bars on gold, we are up around 13% from that last dip. The movement that we saw back in 2009 to 11, gold was up around 30%. Okay. So, not saying this is a guarantee. I'm not saying this is a top, but if you're long gold, this is about the spot that I would say between 3,700, 3,800. I'd be trailing stop losses and see if this is just some wild, crazy, overextended capitulation move. I mentioned this morning, like the retail crowd might start chasing gold, and that's when the top starts to set in. I don't know what that looks like for the equities market. I don't know if all of a sudden we kind of fix the tariff talk, we improve the narrative and get something a little bit more optimistic, maybe, and that brings I mean, gold trading like an asset is. I think right now this is kind of the perfect storm. It's the alternative to the dollar. It's a store of value. It's not necessarily scarcity because we still mine it. It's just harder and harder to mine and more expensive to mine. But gold is up, and it is an inflation hedge. It's a safe haven. It's a dollar alternative. Every central bank is bidding it right now. If global powers don't want to have everything priced in dollars, gold might be a nice way to trade. So there's clearly a lot of bullishness, and I'm not trying to fade that. If we get a big crazy capitulation move like we saw back here in 2009, this is the stretch that I'm talking about. So since '08, and we touched here in '09, that '09 all the way up to this move here. So we went from $880 gold to 1918. That price appreciation from that last touch, gold was up around 117%. Okay, we had a bar count that was over 600 bars. We had a move, and this is what I was talking about: is how far away were we from the 200 moving average? And gold is right here. Gold was around 21% from that 200 moving average, and then we tested low, popped back up, had a double top formation, and came all the way back down. It was still around 20%, which is bottoms. Proceeded to have a little bit of lower lows, but we just went into sideways after a correction. Okay, but this is the move I was talking about from this last dip here. Gold was up 29%. So if this, what I'm trying to show a picture of is if this is the last dip that we saw on gold, that's what I'm looking forward to. And again, this isn't like guaranteed to be anything, but if it's something, if it rhymes, if I'm close, if I'm not too far off the potential like projection of gold, I mean, could this be a runner of this low right here that goes up 30%? Could this push us up into somewhere between like 3,800 and 3,850? And I'll go ahead and mark this out. So let's go horizontal line. Horizontal line. I'll put it right up here around 3,800. Label this. So coordinates, text. Okay. So gold capitulation, 30% from dip, and similar to 2009 to 11. So not calling the top. If gold keeps running, it's arguably one of the better investments running right now. Anyone that's held gold the last couple of years is probably loving this. I still have gold. It's still doing well. Price wise, CEF, $4,300 in profit. GLD is up $22,000 in profit. PHYS is up $4,300 in profit. And that's it for now. So, I mean, those are my gold plays. I've got $30,000. If I want to include silver, SLV is up around $8,700. So, yeah, I mean, I've got about $40,000 in precious metal profits. If we get another chunk of 30% on top of that, or how much higher would this be? Could we get another, 14%? Maybe. So what's 39,000 times 0.14? So if I see my totals adding up to about $44,000, I don't mind taking some profit on gold. I don't mind using some stop losses on gold. If we have any dips, I'm still willing to add to it. I hate buying here at the highs. This is not a guaranteed level that we're getting to, at least in one straight line. I mean, I've been saying this for months now. It's like I prefer to see a correction of gold. That's why I went back to this chart, because this workspace has, we still have some momentum on MACD. We have a signal line. We're still above the zero line. We have the relative strength index, which is this middle section. This is actually making a slightly higher high, although it is overbought. Overbought, still overbought, but I'm not seeing divergence. So we see a little bit of divergence, but maybe this has to go a little bit farther into the weekly chart. Money flows, we're still seeing some money flows that are coming into gold. Let's go to the weekly real quick. Okay, we are officially into overbought territory on the relative strength index, but do you see divergence? Right, the last time we had a high in price, let me use a vertical line here. So we have a high in price, and you can it's very, very subtle, but there was a little bit of disagreement in the relative strength, so that little pullback was pretty noticeable. And then over here, we have a slightly higher high in price, and we have some divergence, and that was a bit of a pullback in gold as well. So on the weekly time frame, maybe this is a little bit better. We're still pushing into, I know it's overbought, but until I start to see that we have higher highs in price with lower highs in momentum, I mean, right now the histogram and MACD is still showing that there's strength. There's not a signal crossover line, so like nothing to me. What is up with this? Where's my MACD at? It's weird. There we go. So there's your MACD, like still very much in control. Signal line, still bullish, nowhere near a crossover, nowhere near divergence. Money flow still making higher lows and higher highs. Not a trend you want to step in front of as a seller. So yeah, trailing stop losses is probably the best thing to do in gold right now. And maybe there's more to the upside. Okay. All right. Big crash coming. I don't think so. I think that what we talked about, first thing, going back to the title today, is basically last week's chaos is potentially these next few weeks of indecision. That's a huge, huge candle last week. The low on April 7th, and 8th, okay, that was a Monday, Tuesday, the lows that the S&P created there, and the movement up on Wednesday, it created about a 13.5% move. So we can have a 3% day like today, it's still inside the range. We can have a 1 or 2% up and down, it's still inside the range. So I think this is probably where the market's going to kind of survive and live and jump around and be all sorts of messy for the next maybe a few weeks. And like I said, technically speaking, I could see something like this. We have a low, we have a high. So there's a swing, pullback. This would be a wave structure. And maybe the market can follow suit with this being a low, and we come back up to the highs again. So just a range, right around 5,100 support, 54 to 5,500 resistance. Another opportunity to hopefully de-risk, de-leverage, and hopefully we're not just going straight back down. That would not be good for anybody. Okay. Gold is telling you trouble ahead. No, it's not. I mean, gold's been running. It's just a safe haven that feels like it's the only place people can hide out right now. Something that's appreciating. Gold's up, so everyone's, and institutions are parking money. If you go to GDX is gold miners. They're starting to finally catch up as well. I don't love to trade miners ever. 31% up in this last little stretch. That's actually a pretty big catch up trade from April 7th. That's pretty nuts. From this low here, miners are up 30.18%. That's a big pop. I'm not chasing this. I'm just going to stick with the spot price of gold. Unless Trump and China come out holding hands. Yeah, I get it. Like that is the big narrative that needs to change. The global economy is probably resting on the frenemy type relationship of the US and China. It's like if the US is going down, it's going to take the entire market with it. It's going to take the entire global economy with it. That's the sad part. So I don't think that's what everyone wants. I think the financial markets are too big to fail, but there is a lot of uncertainty and certainly a lot of um, tension and angst in the markets. And you feel it, you see it. I mean, we're getting some monster swings. I mean, look, as somebody that's been just trading through mostly bear market or bull markets that have been just disrupted here and there. I mean, that's the difference, right? Since 2008, 2009, all we had was the inconvenience of a disrupted bull trend. 2015, 16 was sideways. 2018, a Volmageddon event. 2019 was a melt up, broadening pattern, crashing. I mean, since 2018, this market has been literally booms and busts, literally booms and busts. And the question right now is this structural, which would be potentially systemic, or is this event driven? And I think right now, I think the market is still clinging to that it could be event driven, that the narrative can change, US and China can come to some type of agreeable terms, and we'll see what that looks like. But if this is going to be like trade war / World War III, and this is pick your side, draw your lines, put on your red, white, blue, and put on your red and yellow, and pick a side. If that's what we are doing right now, if that's what this is coming to, this isn't good for anybody. And the financial markets are the least of everyone's worries if we're going to have some type of, actual war. So I hope it doesn't come to that. And there could be, cyber threat wars, there could be digital wars, there could be, debt wars, there could be currency wars, there could be nuclear wars. It's like, yeah, that's some scary stuff. But like I said, it shouldn't have to come to that. I hope it's not. So anyway, all right. Um, Dollar, yeah, I mean, dollar's breaking below. Just be careful on the dollar because we've already sold off so aggressively. Um, I think if you're lucky on the dollar, you see a pullback and then another opportunity to short it. Or if it just looks like it's stretching, we hit some high, low, lower, high, lower, low symmetry, and then maybe dollar pulls back. This is a lot of strong support, become resistance, and this is a dollar that's heading lower. So, I mean, for me, it's like if I see an opportunity for the dollar to come down to a level here that bottoms out on a smaller time frame, I wouldn't mind looking for a short-term buy opportunity or use this low as a chance to reposition for shorts. And maybe this trend line, which has been started here, maybe this trend line is the resistance zone. So I would not be looking to like pick the bottom on the dollar unless you see smaller time frame confirmations so you can have some stop losses. But if this is the start of a much bigger trend, then yeah, we could be going down into 97. We could be going down to 92. Um, but I think a 98 to 97 stall, pull back to 100 or 101, and then a push down into 94, 93, 92 area. I could see another wave cycle happening. Okay, silver holding well today. Yep, it is for sure. That's good. Yeah, gold and silver both doing pretty well. When appropriate, that insurance play in MES today was at an original entry around 119, now 134. So I just entered it for one contract there, Joy. I did $117 debit. So yeah, it's probably showing profit right now. So that trade right now is already up about $80. I mean, what I will do on this trade is these are some hedges that I have for my crash insurance course. If this hedge right here is going to offer up, and it's not really the dollar amount that I'm going after. Obviously, there's an asymmetric dollar amount. I risked about $580 to make potentially $2,900 in this trade. Now, if we drop back down to 4,800 in the next 30 days, I'm probably just going to take the profit. Okay. I'll probably just take the profit. This may offer up what was about a $500 risk or $600 risk. If it's offering up $500 to $1,000 of profit, I'm going to take it. Just going to take it. So that's one way for hedge. Like if it's offering 2 to 3 times my risk, I'm going to take the profit. MES here, this one's out to August, same type of thing. I'm up, 78% on the position, up about $700. If this one offers up, I mean, asymmetry wise, if I take this trade here, 50-50, let me look at my pending here. Let me go to 50/50. So I have an $880 max risk for a $5,300 max profit. So somewhere around a 4-to-1 or 5-to-1 potential return. Um, and the nice thing is here is this one was taken at a $35 debit. I put on 5 contracts. I mean, this one could also pay very, very well, you know? So I'm again, I bought this when it was pretty low volatility. The hedge out to August would mean to me if we revisited the lows at 4,800, if we revisit the lows, lower than 4,800, if this is up, maybe $1,500, maybe $1,600, maybe 2 grand, I think I'm just going to take it because most of my hedges I want them to be out a little bit farther. Okay. Copper is fine. This one maxes out around 160 bucks, and I'm right there. Like I could close this one down, but this one closes out in 8 days. So I've got the whole weekend to sit on it. I don't think copper is going to dump all the way back down to 4.2. But I do have a profit trap at 4.18, so we'll keep an eye on it. But I think we'd have to make fresh lows in order to see copper dump back down to the lows again. Here's another one on ES. This one's up about 160%. This one is out of the money, but it's out to December. So if we revisit the lows again at 4,800, it's the lows around 4,820 on the SPX. On ES, it was a little bit lower than that. Here's the ES feed. So ES feed, we were down to around 4,830 or so. Okay, 4,834, and the lows on SPX were right around 4,837. Right. So my point is if we do come back down to these lows, I'm likely going to close out the near-term expiration, so MES hedges, and I might just keep the big asymmetry on ES. But I mean, if I paid on this one, I think this hedge was. So this hedge max risk is $975 for a potential profit of $44,000. I mean, in order for this to be $44,000, the ES has to be down below 3,100 by the end of the year. Unlikely going to get there. But if this is offering me, let's say, 5 grand a profit, only cost me $975. If it's offering me 5 grand a profit, I can consider taking that profit. If it's offering me 10 grand a profit, I consider taking that profit. This to me is my biggest protection measure against a nasty, nasty downturn. Okay. So that is what's keeping me in the game. I'm still a little bit red for the year. I mean, not bad. So 19. So I'm down 0.6% for the year. Fluctuating open P&L, it doesn't really mean anything. I just trade all the way through it. But for the year, I'm down 0.6% as the market's down like 11% year to date, and the market's down about 14% from all-time highs. Yeah, market's down 14% from all-time highs. We obviously had the drama of 20+%. Nobody's happy. Nobody's excited. I'm not doom and gloom bearish, but I am certainly. It's going to take a lot to convince me that I'm optimistic right now. Okay, I think what's so silly about this whole arrangement is I don't know what the end game is. I mean, does the U.S. think that this is the way to get leverage over the world? Because I don't think that it is necessarily. I think that if anything, this is putting the U.S. on its own little island, thinking that we're going to do things better than everyone else. And if you want to do business with us, we'll treat you well. But we are adding so many more roadblocks into the global economy that it's going to make things more expensive. It's going to make things more difficult. And that challenge is going to be represented in the stock market. And so, yeah, you can have some, inflation comes down and you can see that rates are dropping. You can see some things that help out Main Street in the US. And that's what maybe all this is really for. Let's bring rates down. Let's bring inflation down. Let's bring energy prices down. Let's help Main Street. Okay, fine. But at what point does the stock market say, hey, man, this is too much? Because the stock market is already going to price in a recession by the time it actually hits. Right? By the time it hits the tape, we've already had the damage. It could be a 20% correction like we already saw. It could be a 30, 40, 50% correction like we could be seeing. I don't know. But what does Main Street get out of it? Well, maybe they get lower rates to buy a home or an automobile if they still have a job to buy a rate or buy a house or automobile. And that's the unknown is like, are we doing all of this to eventually just lead us into a deeper recession with labor that doesn't hold up and a consumer that's already been overextended and the resiliency is not there. And all of a sudden, Main Street is in a recession. But here we are telling you, like, well, you can borrow now and houses are cheaper and prices have come down, but people are losing their jobs and there's nothing good coming from it. Like, that's the slippery slope that we could see. Does that make sense? So that's why I'm not like super optimistic. I'm not doom and gloom, but I do not want to be naive thinking that this is the bottom. I think that's crazy. This would be a correction bottom, but I think there are bigger realities that we're dealing with. If this is a correction bottom, well, we're not really getting optimistic at this 5,500 level. We're still dancing around here between this 13.5% range. If we break this level, you can see why I'm concerned. You know, going out to the higher time frames, nothing looks good out here. Like literally nothing looks good. So I hope it holds. But I don't want to be naive and think like there's no way this goes lower. This is not a generational buying opportunity. This is an opportunity right here to get long for a short-term de-risking and short-term, protecting your portfolio, maybe taking some near-term stabs, maybe a couple of, 2-week, 4-week swing trades. But this is not a generational buy and hold. Okay. Generational buy and hold is down here. If that is offered up, then yes, I will long-term back the truck up, put in probably 80+% of my cash, and I will buy this market at a monster discount. And I think that will pay very, very well over the next 3 to 5 years. Okay. But if this goes here, I'm trying not to also be down 30, 40, 50% in my account. And so for me to be down 0.6%, I think I'm doing okay fighting out. I'm fighting this market. And, this little, profits I made this week. Okay, cool. I got called away for profits last week on Tesla. I had some income trades this week for a couple $1,000. I'm fighting the good fight. There's still open positions. I still got to battle through this stuff, but there's a lot of price action in that 13.2% range or 13.5% range that this market is just going to be noisy. Okay. Meanwhile, daily profit play, we're like 63 for 69 right now, winners. Waterfall, we keep closing out some nice wins. I've got a couple earnings trades on newsbreakers, which I think will be fine. Crash course will be fine. Double up has been, I said this in my Telegram today, double up's been a difficult one because I'm not really getting any obvious outliers. I don't zero DTE directionally. I zero DTE to sell premium to take advantage of the overstated expected moves. And that's why daily profit play does really, really well. Waterfall is pretty mechanical. I can position myself. So even when this market was down 20%, we only took a couple losses along the way. We went like, I think 18 for 21 for winners. So we survived it pretty well on top of, having basically 40 winning trades in a row from last year. So just, you got to keep trading through it. And I think, and I hate to keep saying this, but this is going to make you learn, right? Like this will make you learn whether you like it or not. I'm hoping that you can learn with cash at the ready. I'm hoping you can learn with buying power available. I'm hoping you can learn where you can still focus on some agility in your portfolio and focus on how to trade through this environment as opposed to cross your fingers, stick your head in the sand, hope it doesn't get worse, and you just wait for things to get better. Like that's not good. If we're backed into a corner, it feels nice to know that you can be dodging and weaving. You can rope a dope this market a little bit so you can survive it. It's not going to be easy. But the last thing I want is for every trader that experiences, oh my gosh, this market's down 40% and everyone feels the pain so badly. What do? They dump everything down here just to stop the bleeding. And that is the generational opportunity that patient investors or opportunistic investors would be waiting for. And yeah, you have a 2, 3, 4, 5 year recovery. You unload a fiscal and monetary policy bazooka, whether it's sustainable or not. If the markets go up, it's an opportunity to be long. But if traders can't get to that point to survive that, I think this is going to be just a very messy environment. Okay. So lucky I'm fixed at 2.75. Is that your housing, Corey? Joy? Hope you're closing. Yeah, I do too. I mean, I can look at it. The one nice thing is, bonds are up today. So this is somewhat encouraging, and US 10-year is down. So I want to make a note here, like Liberation Day, when we started that Thursday afternoon, I think it was when was April 2nd? April 2nd was a Wednesday. So Wednesday afternoon was the announcement after closing bell. Thursday was the market's terrible reaction, and then Friday some more, Monday some more, and that was the what? Third, fourth, and seventh. Those 3 days were pushing this market down. So the nice thing is bonds are up, yields are coming back down. I would like to see, if possible, I'd like to see this, where if the yields can come down back to this Liberation Day low, then I'm probably looking at like low sixes for a new house, maybe 6.25. But I'm working with a provider that might be offering up some cost-effective refis. Because obviously, if the market, I mean, here's the scary part. If the market reacts like it did the opposite September to December, when the market was cutting, the Fed cut by 100 basis points and the bond market did the exact opposite. My concern this year is that the same thing happens. From June to, let's say, January, the Fed cuts another 100 basis points. What if it's the opposite reaction again, right? What if we go from 4.15 all the way to 5.15? You're talking about mortgage rates that are going to be at like 7.5, 8% again. And yet the Fed has cut 200 basis points in the last year and a half, and the market is not getting any relief from it. Like that's my biggest concern. And obviously, if the 10 year is going to go lower, then there's a lot of pain coming in the stock market. So it is not done yet. None of this is done. None of this is resolved. So I will be happy to close. I mean, I've done the numbers. I mean, I can close 6.5 and be okay. I can close 6.25 and be better off. Sixes will be great. But I mean, I can close at 7 and be okay. I'm not happy about it. So the goal for this house is be really aggressive, paying down a bunch, paying probably one or two extra, payments a year, and just try to stay ahead of interest rates. So, and I'll just try to chip away at principal faster. And if I can sneak in, 1 to 2 payments a year for the next 5 years, that adds up. But I'd also like the opportunity to refi. I just don't know if it's going to be, I mean, this has never happened in 40 years. Fed cuts rates by 100 basis points and the bond market goes up by 100 basis points. So my concern is doing it again from June to July or June to January is that it does the exact same thing. Fed starts cutting, market says it's not going to work. And the market does the opposite. Like this is where I think something is breaking, you know? But the only way we got lower is by the market dumping. So look, there's just so much crap to walk through and navigate. All I can say, and I said this morning to my daily profit members, look, all this stuff, I mean, all I'm trying to do is minimize some of my exposure. I mean, I've still got $1.16 million in cash. That's about a third of my portfolio. I want to get this higher. I think let me see. Let's go 1.16. 1.16 out of 2.9. So I've got about 40% of my portfolio cash, which is plenty of dry powder to continue to trade, and I'm okay with that. But I mean, I want to have stuff at the ready. So I'm just trying to be careful. That's all. And that's probably my biggest message to take away from all this stuff. And I know I'm going to repeat this and I'm going to repeat these themes, but I don't want anybody to feel like you're blindsided by what we might be experiencing. A pleasant surprise for 2025 would be the market doesn't make a new low. That would be the pleasant surprise. Okay. What I could see happening is the market does make new lows and it makes multiple new lows, but this market essentially holds, right? And it looks like around this cliff and it looks like things are going to get worse. But if we can confirm this upside, it'd be lovely to see a little squeeze. And maybe it's a short-term squeeze. Maybe it's a squeeze up here and we hit resistance and we fall back down and 2026 is the big bear market that nobody's thinking about, But right now, the critical levels are here. If we don't break that low and we don't break this high, we are right back where I said at the very beginning of today's session, a 13.5% range. And I don't know what's going to happen. Every day is going to be a new day. So minimize the exposure. Don't trade big. Don't be a hero. Don't take crazy positions. I want to sell puts. I want to sell premium, but I'm also happy taking a bunch of profit. If I'm at 50, 60, 75% of my max profits, I'm just going to take it, move on, not take the unnecessary risks. Make sense? Okay. Yeah, everything seems to be counterintuitive. I get it. Yeah, market's up a little bit. That's fine. Whatever, man. I mean, it is. So, by the way, for the trade this morning for daily profit play, for the end of the day, this is still, I mean, we're only 4 minutes away from closing bell. It was I think it was 52.30, 52, nope, 52.50 and 52.55. So I mean, okay, market makers from this morning did their job. Even though even though this market had a pretty nasty spill and we're down, we were down 3% at one point, 4% on the Nasdaq. You can see the market claw back a little bit, and going into close, the market defended the levels that I talked about this morning in my daily profit play. Now, do we have to sit and ride this thing out and be all worried about? No, because we took profit in here this morning and moved on. But this is a beautiful thing about what this market does every single day. And if I take that philosophy and that strategy, I don't have to worry about what the market's going to do tomorrow. I'll just trade it, right? I don't have to worry about what the market did today. I'll just trade it. I don't worry about what the market did on Monday. I just trade it, you know? And your worst case scenario is define risk. You survive, you trade the next day, and you keep grinding through it. And it's just a lot less worry. I think right now that's what sucks is like all this has me nervous. All this has me confused. All this has me uncertain. I can't position for this right now. I can't position for bullishness. This isn't a spot that I want to be bullish. If I'm going to be bullish, it's here. You'll come back and revisit the lows. I'll take another bite. I'll see if this market's going to hold that low and be resilient. But until then, I think this market might have a couple of wild swings where we're down, we're up, we're down, we're up, we're down, we're up. I mean, we could be dealing with some indecision, right? Does it test the lows again? Is it a fake out? Is it a bear trap? And then the market comes back? Sure. I will do my absolute best to try to find what technical pattern we can see here to trade it. If it goes down for a day and then up for a day, well, that's an engulfing candle, or that could be a piercing line. That could be a morning star, all sorts of things. But it's like, does it give me the evidence to say, I think we got a bullish case? So yeah, I'll watch. But all I'm saying is, I don't want anybody to be surprised if I'm doing these sessions every single day and we're having these conversations where the S&P is down in this area and nobody can say like, Chris, how'd you do to prepare for this? Well, I've talked about it for months. And if this happens, I want to be as protected as I can be and still making good decisions and still talking to you just like this where I'm not crazy emotional. I can be frustrated. I can be annoyed, but I know that my portfolio is going to be okay. I'm doing what I can do to survive this, and there will be better opportunities ahead that should be a little bit easier to trade, right? And that as a trader is all you can do. Control your risk, have some dry powder, choose strategies that don't make it very stressful, focus on the process, and trade. That's what traders do. I'm not trying to be a hero. I'm not taking big risk right now. I'm pretty conservative, but I'm taking bites. I'm deleveraging. I'm de-risking. I'm raising cash. I'm hedging when I think it's appropriate. And when the dust settles, maybe this is just a correction. Maybe this was an event-driven correction and the market finds a way to stabilize, the narrative changes, and we do have a little bit of optimism coming in 2025. Maybe, but I'm just not there yet. Okay? I'm not convinced that we're there yet. Make sense? All right. Okay. I think that'll do it for today. Any charts, any questions? Looked at the currency strength. Just to recap on the day. Japanese yen, euro, and Swiss were up higher. Dollar and pound were weakest. Currency wasn't crazy volatile, but enough to be noticeable. Dollar Swiss down about 150 points today. That's not nothing. Everything else is, getting hurt a little bit. Definitely some risk off flows. End of the day, we closed SPX down 2.24, SPY down 2.2. A lot of that started off with NVIDIA this morning, and then was led by Powell not really giving anything reassuring. Right, here you go. Ends sharply lower. NVIDIA drops. Powell says growth appears to be slowing. Okay, I mean, we knew that was happening at 1:30. You could see that in the tape all day. Nasdaq still down 3%, but at one point was down 4%. So we fought back a little bit off the lows. Tomorrow's another day. So I do wonder from a swing perspective if this is, and tomorrow's going into we're going into a holiday on Friday, but this market can go here here and then try to rally back up for next week, I still think this is clean structure, right? You have an impulse wave, you have a flat pattern, and the market can figure out what it's trying to do. So if you have a strong case of support, which would be there, and a strong case of support, which could be there right around 5150 or so, 5100, then we bounce back up. We have resistance from Wednesday, just off those highs, and same thing around 5480, 5500. Maybe some indecision that the market deals with, right? If you look at that Wednesday candle, it's also very inefficient. So I could see the market trying to test this same low, okay, or testing the same low around 5100. So there are some points that I'll be watching really closely in the markets. Bitcoin up a little, that's good. I mean, gold's up a lot. Bitcoin's up, gold's up, that's cool. FinViz, there's your heat map. 70.6% of stocks declining. A lot of red in the markets, led by big tech. That's not good. When you got large cap tech red, Nvidia down 8.5%, that sucks. Tesla down to 236, that sucks. Amazon down almost 4%, that sucks. Like Mag 7 down, not fun. 71% of stocks down today, not fun. Okay, how's the world? Kind of mixed, I guess. China, not great. Okay, Taiwan down, China mostly red. United Kingdom has a little bit of mix in here. That is, I'm guessing that's energy. Belgium. We were just talking about this today, actually. Budweiser, Anheuser-Busch. I was looking at TAP, SAM, and BUD for potentially like a little low risk, low beta dividend play, but they offer like a 1% dividend, not great. I think TAP offers like a 3% dividend. So anyway, kind of mixed in the world. Canada, a little bit more green sprinkled in there, but US, not great. A little bit of rotation. I mean, energy did okay today. We did have a little bounce off the lows. So let's go to US oil. Oil was up a little bit today, nothing crazy. We bounced off that low from the 9th. That was the Wednesday rip, and oil was up. So I suppose on a positive side, I'm just going to sprinkle in one little bit of optimism today. Bonds are up. So at least acting as some semblance of a safe haven. If stocks are down, which 71% of stocks down today, at least bonds are up. At least yields are improving slightly. So does this mean more pain? Maybe, right? If this is going to go down, I have a feeling that bonds are going to have to go up. If bonds go up, that's probably mostly stocks going lower. Stocks can go all the way down to that same low we had on the 7th and 8th. They can have the low on the 9th as well. I mean, that was the bottom. So if stocks want to revisit those lows, so be it. But does that bring yields a little bit lower? Maybe. I mean, one thing I'm not celebrating right now is our yields are still above Liberation Day announcement. So this is the break of the basis trade and major liquidity in the U.S. markets, and that does have me concerned moving forward. But all is not lost. There's still some green out there. This being one of them. Okay, gold's up 3.4%. Bitcoin is up just under 1%. Silver is up 1.3%. I know we had some stocks advancing, but copper, see copper today. Copper is up 1.07%. I mean, there's something. And do it again tomorrow. Okay. Keep in mind, tomorrow is a pretty major expiration. It's the monthly expiration for April. We're also going into a holiday week, so I'm really curious to see how price action plays out tomorrow. We'll talk about it then. All right, thanks everybody. If you are a member of the YouTube channel, kindly like the video. Appreciate that. That helps the algorithm a lot. So when we go live, it pops up on those search bars so everyone can jump in and see, oh, live trading, let me check it out. And they can pop in, say hi, and become new members. If you're not subscribed to the YouTube channel, you can click that notification bell, subscribe to the channel, and we go live almost every single day. And we talk shop. So, all right, thanks everybody. Have a good rest of the day. I'll see you tomorrow. Thanks, bye.